And we are live. It is hashtag Friday Potty. We got the background back. This is the second week in a row that we had the background back. I'm going to start posting YouTube videos a lot more now that I have a little bit of my time back from filming the gold course for verified investing, all that good stuff. I'm probably going to talk a lot more about gold, Bitcoin, specifically Bitcoin, the crypto markets analyses, rather than like what I used to do, which is like call out scams and rug pulls, because for whatever reason, I don't think people really care that much anymore. I think people are hopefully people are getting scammed less. I don't know. But I think that teaching people how to be able to trade and see key levels and invest wisely will be probably more of the focus of the channel rather than what we used to previously do. And I have an entire other channel that I can do that on to call out like the Brian Legends of the world and the gray markets and all those poo putts. So expect that on the Drew Wolfer channel, the Drew_Wolfer channel, and not necessarily this channel. This channel is going to be a little bit more professional by nature. More technical analysis, more market analysis, psychological analysis of the markets and things that can move those markets, like what we just saw, right? So before I even get into all that, let's just say, if you're here from the future, hello from the past, make sure you smash the like button on your way in, smash it on the way out. At the very least, you can always revoke it later if I say something that you don't like. Make sure you subscribe. Boom! Bang on that notification bell. Comment anything you want in the relevant sections. Let's talk about it. We've got a lot of stuff happening in the market right now. I'm going to smash through a couple of comments. We don't have too many comments, so let's bust through them now before they start coming in. And bing, bang, boom. Got Ayo Wid. This person's a legend. He's not always here, but he's always watching the recording. I appreciate that. Gianni, my Italian brother from another mother, he knows it's hashtag Friday Pie Day, baby. And so does Jeremiah Keeter. We got Richard Four in here. Thanks for showing up, my man. He says he's listening while he drives. He's got the braids for days, and he's throwing some pizza at my face. He knows I'm just a grown teenage mutant ninja turtle. And he says, Good Friday, Wolfpack from the Norwegian Berserker. We do have the braids for days. Let's get into it. All right. So first and foremost, we saw something that I want to talk about fundamental and psychological analysis right now. Okay. A lot of times you'll be doing your technical analysis on these charts. You'll be seeing like, okay, Bitcoin's reaching a key level right here. There might be a nice little push upwards, right? Maybe we're bull flagging it. I don't know, right? We kind of just saw that where we were up at like the 64 range and we were almost like bull flagging, right? So a lot of people were like diamond handing it and saying, I'm going long. I'm going to go long with leverage, with Bitcoin, whatever, right? And a lot of people went long on alts, okay? What actually happened? Well, unfortunately, there's two things that happened, and we're going to talk about both of them. But one of the things that happened that really triggered it was Iran bombed Israel, okay? And then Israel's calling for the United States to essentially go to war with them against Iran. So this is a big problem, right? And bam, and prayers to anybody that's involved in any types of these Middle Eastern countries that are having all these conflicts. Obviously we feel for you. And then we saw what happened in the markets as well. So you saw Bitcoin go from like 64K, where we thought it might push through that level, that key level, and get up to maybe 66, 66.5, and then start its onward trajectory upward, right? But it didn't happen because even though the technicals were lining up, that it was more than likely that was going to happen, then something fundamentally outside of the markets and outside of that technical analysis actually pushed it the entirely opposite direction, right? So then what happened? Oil prices went up, right? Because of the rising conflicts in the Middle East, oil becomes more expensive because there's going to be less supply, right? Now and the demand stays the same. If not, it went up because now you've got oil demand for warring countries and things of that sort. What does it take to run all of these different war machines? Oil. So you see oil go up and then the US dollar pumps, right? And because it's linked to oil, okay? And so when you see the US dollar go up, usually what you'll see is gold will go down. Gold didn't actually go down. Why? Because gold is also a safe haven asset in times of war, turmoil, things of that sort. So you actually saw gold kind of capitulate and stay kind of stagnant. And we'll do a little bit of gold analysis here in just a second, and it'll translate out to technical analysis on pretty much anything else. Silver, Bitcoin, whatever you want to do it on. Do that in just a second. I want to smash through some of these news things really quick because we have had, we'll just call it a hectic week. let's call it a hectic week in the market. Crazy stuff happening. My application windows are not popping up. Give me 1 second. Let me get these. Boom. Okay, cool. All right. So first and foremost, we have this. All right. This is kind of reiterating what I was just saying. All right. Hold on 1 second. I got too many tabs popping up. Give me 1 second. I'm a horrible live streamer. And I'm getting out of the Discord because nobody's in there. Everybody comes on here and watches the stream. So sorry if you're gonna enter late on the Discord. Too bad. Too late. So gold does hold steady as a safe haven demand for counters your strong dollar, right? So usually when the US dollar index goes up, bing, bang, boom, gold goes down, right? Secondarily, gold also goes up when we think that we're going to see interest rate hikes, right? Or gold goes up when we think the interest rates are going to go down. Why? This is also something that I teach inside of the gold course. So I'm kind of giving you a little bit of free alpha here, but essentially the reason is because whenever you're able to give the bank X amount of dollars and they give you a higher interest rate because they can loan that money out for more because the Fed interest rate is higher, right? So they can give you a higher yield. You're more likely to put your money in the bank. That's why they do it, right? Then secondarily, when that interest rate is lower and the Feds lower the interest rate, it's because you're not going to get as much of an interest rate coming back on the money, the dollars that you have in your bank account. So a lot of people will say, well, if we've got a 3% interest rate, 4% interest rate, I can probably make more on that historically in gold over the next year than I could make on this. And I'm doing it in an asset that isn't continually depreciating like the US dollar, whereas it's actually continually appreciating, which is gold, right? Secondarily, I'm just going to stop there because again, like this is something that I teach in the course. I don't want to, make anybody mad by giving away too many of our secrets. Then we also saw Bitcoin get absolutely rocketed, like throttled. 272 or 271, I believe it was, $1 million in 24 hours got liquidated in terms of long positions. Bitcoin dropped all the way down to 60K. We've got a channel that we're trading in from about that 65 range down to about, I believe it's 56. And once we get down to that channel, I think I can show you kind of like a graphical representation of that down here somewhere. Yeah, okay. So here's kind of the channel that we're trading in. It does a pretty good job. So 56 is kind of the bare bottom, right? That's where we bottomed out 1, 2, 3 times, and that's where we broke through, right? And then you've got a channel all the way up here to about 70K, but I would be a little bit more conservative on this and say, somewhere in the 64.5 to 65.5 range, because this is where, you're seeing you're topping out here. They retested as support, retesting it as support, kind of capitulating, going back and forth, bonging right here. Same thing here, topped out at about 64.7, maybe 65K, somewhere around there, about 64.5 here again. So you see where I'm going with it, right? Now, we did get smashed. We got absolutely murdered. It went from about 64, I believe, 5 down to about $60,000 in just a couple of days. We saw about $272 million in liquidations of long positions. But now we see Bitcoin at 62.3, right? And if you go and you look at the map on this, ETH is up, Bitcoin's up, other altcoins are up, Solana, XRP, Sui, Dog with Hat, even Pepe, all of them. Like most things are up. There's only like one thing on the heat map that shows red instead of green. And so we kind of get starting to bounce back because we saw a little bit of support at that $60,000 range, which is a key psychological level. $10,000 marks are psychological levels when you're in the multi $10,000 range for the price of an asset. Same thing. $100 marks. When you're in the multi $100 marks, you're going to see those $100 marks become psychological levels where if it hits, it might get rejected, or if it goes down there, it might get caught and then bounce, right? Same thing with the thousands. When you're in the multi thousands, we saw $10,000 was a massive, massive area of resistance in the previous bull runs back in 2017, right? Or right before 2017. So with all that being said, Bitcoin did go back down to about 60K because the Middle East tensions did not help it, right? Obviously, we saw the US dollar kind of strengthening a little bit, but we also saw the Middle East tensions come in right when we were about to hit that and smash through that 65.5 range, about 65.5. and start heading upwards, that's when the rug got pulled from under us and we just went right back down to about $60,000. And nobody wants to see that. It happens all the times, but it is what it is. The other thing that I want to kind of talk about, because this is also pertinent and it has been short term, we'll call it like short termly resolved, is this dock worker stuff. Okay. So essentially what happened is the ports on the entire eastern seaboard, as well as the Gulf Coast, right? We're talking everywhere from the eastern coast of the United States all the way down to everywhere over all the way to Texas, right? The western ones were on a different, the western ports are a different contract, so it didn't happen over there, but you can't bring everything in on the western port. It's just not how it works. That actually costed us about $5 billion per day, and they've been on strike since the first. They did reach a resolution short term, right? Port strike ends today as workers agree to a tentative deal on wages and contract extensions. Now, the TLDR on this is essentially what happened is whenever these guys were going back to negotiate their wages, right? The port workers, okay? One of their main arguments was, hey, man, back in 2020, we were one of the only types of workers that were showing up to their job, right? Same thing for healthcare workers. They were all showing up to their jobs. They did not stop working, because if they did, a detrimental collapse of our economy probably would have happened. As you can see, when the ports are shut down, $5 billion a day in losses. And usually it takes about a week to fix the backup of one day, the ports being out. Okay. So even right now, if they went back to work today, there was 3 full days where the ports were just not doing anything except for like automated stuff. They have like their automated robotic, whatevers. But my point is, it's probably going to take them to the end of this month or so to get the ports from being backed up again, right? And it's because there's so much stuff that comes in every single friggin' day, and then it just stacks up. So they've gotten all of these different boats out to where there's only like 53 tankers that are still out there, or large scale shipping boats that are still out there waiting to come into port and start getting unloaded. That's still a pretty decent amount of massive ships, right? So my point is they have reached a resolution where their wages, tentatively, they're going to work until I believe it's like January 1st or January 15th. And they've reached this tentative agreement that wages are going to go up by 61% over the next 6 years. So essentially a 10% increase over every year for the next 6 years, which I don't necessarily think that that's fair. I don't even know if that's going to outpace inflation, because the US is trying to say, oh, we're trying to get our inflation rate down to 2% per year. Good friggin' luck with that whenever all this crazy stuff is happening in the world. And then obviously we have absolutely no idea what's going to happen with our election. And I'm not going to get political on it. It just is what it is. Just understand that it's not that easy to get your inflation rates down, especially when you've already set precedents that prices continually go up. And in a capitalist economy where profit drives everything, if they're having to pay more for their goods to get their goods here, it's just going to happen. Okay. So there's 2 ways that this goes down. Dems get in, right? The Democrats get in, and we kind of see the same thing that we've been seeing, right? Which is high inflation, blah, 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 all this stuff, right? You see what's happening right now, probably conflicts and wars and things of that sort. Republicans get in. Then you see potentially tariffs coming in on all of the goods that are coming from other countries, namely China, right? And those goods are going to cost more now for people to bring them in, for companies to bring them in, which the reason for is to drive economic growth in the United States and buy American, right? But American is more expensive. So what does that mean? Prices are going to go up either way, okay? Whether it's through tariffs or whether it is through us buying American, right? Unless we can find super efficient ways to produce everything in America for roughly the same cost as what we can get it for overseas and ship it in, this is going to be a big issue. So my point is I would not, either way it goes, expect inflation to go down or go down to 2% like they're thinking that they can get it there. Like, for sure, not going to happen anytime soon. Now we do see world reserve currency status kind of being up in the air. It's all in limbo right now. The US is trying to keep that status. Then other countries are trying to take that status, namely China and the BRICS nations, right? Russia. They're trying to take that reserve status as the world reserve currency. We'll see how that plays out. Nobody knows how that's going to play out. I have my own theories, and I think that gold is going to play a very integral role in this. And I've been saying this for probably years at this point, but maybe people listen, maybe they don't. I know I did a BRICS series a long time ago. I did a CBDC series, which actually wrecked my channel's analytics because anytime you talk about CBDCs, you just basically get, shadow banned or gray banned essentially. And I'm still suffering the consequences of talking about CBDCs and doing an entire series on them just to like bring them to the light. But yeah, I probably won't talk about them anymore. But at the end of the day, I do think gold is going to play a major role in our new economy that could be potentially unfolding right before our eyes coming very soon, right? On a worldly scale. So think about that. Think about where this could potentially go. In my opinion, it's gold and Bitcoin. Okay. So, and I like alts. I get it. I totally get it. Okay. Ethereum, Avalanche, dude, Polygon's got wrecked. I love Polygon. It's gotten wrecked. Hopefully that bounces back. One of the biggest gainers, one of the fastest bounce backs, FTM, baby. We love FTM. Over at Wolfer Finance, we love ETH. We love AVAX. We love FTM. We're seeing the growth on those assets. We're seeing those assets bounce back faster than most other assets, right? Except for maybe meme coins, whatever, because people are like, oh, buy the dip, diamond hands, but yeah, there was like a statistic I saw that it was like 90% of the people holding Polygon are at a loss right now. That's crazy to think that high of a percentage is at a loss. That's nuts, man. So yeah, we're really hoping and praying for that, hint. But let's do some gold analysis really quick. I want to show you kind of some of the things that I've been seeing on gold and show you where this could potentially go. So let me go ahead and present my screen because I think gold is probably going to ride with Bitcoin as well, or Bitcoin could potentially ride with gold as well. So let's get to it. Bam. Boom. Okay, so let's share the screen. Bam. Okay. We're on the 30-minute chart, okay, for gold. I've got all my stuff drawn. That's fine. But here's kind of what I'm seeing for gold, okay? And these, we can go. If you want to see my analysis and stuff like that, I can do it on other videos. I won't do it on this live stream or anything like that. I can also do analysis on gold or on Bitcoin similar to this, okay? But essentially what we're seeing right now, I'll show you. Essentially what we're seeing right now is we've got a point of control kind of somewhere up here in about the, 2,650 range, right? But we are below that right now. Okay. So that's not good news for us. We're at like 2,660 for the point of control on the 30-minute chart. And it just depends on, what time frame you're on or where you're zooming out, because if you zoom out, the point of control is really down here around like the $2,500 range. So here's my point. If you draw a Fibonacci, this is how you trade all-time highs, okay? So this is me giving away free game. This is me giving away free TA, things that, I've seen happen. If you're trading into all-time highs, which a lot of times in the gold markets and in a lot of stocks and in Bitcoin, we're trading all-time highs. We're trying to figure out where's the next all-time high likely to be. So if you go and you do this analysis on gold, the next all-time high is likely to be somewhere in the $2,725 range. Obviously, we have to break this 2685 range right here, because this is essentially where the previous all-time high is. We have to break through that, but then we could see it go up to about 2725 and even further to about 2767. Okay, so somewhere in the 2730 to 2770 range is where you could see gold going in the short term if it does break that all-time high and you get some bullish momentum going up towards, the north, which I think we're kind of capitulating right here. We could be bull flagging potentially on different time frames, maybe not on the 30-minute time frame, but on other time frames, we definitely could be bull flagging. So here's my point. Once you start to see a little bit of capitulation in this range from this all-time high down to the 0.618, which is right around here, okay? You're seeing it happening right now. This is coiling, okay? This could take a drastic move upwards, or if some seriously terrible news comes out and we've got overbought conditions, or we've got overbought conditions up here, and we've got it on our Stokes, on our RSI, and you're seeing MACD starting to turn to the downside on higher time frames, boom, you could see it drop down here to the 2,500 range, 2,580, something like that. I would say your next level of support is going to be right here in about the $2,590 range. You can see right here where it actually found a serious resistance 2 different times, actually 3 different times if you take this into account. But that is how you're looking to trade all-time highs. Where could it go from there if we smash through 2767? 2,900. Okay. And I'll even put up all my other Fibonacci's to kind of show you how many of these line up in that range. You've got 2885, 2936, 2902 right here. So somewhere in the 2875, I would say, to about 2940 range is where you could see it go if it smashes through 2767 or 2725, right? And this is more short-term time frames is what I'm talking about. These are different Fibonacci's that we have drawn, okay, from whether they're super, super long-term Fibonacci's that we took, you know, an entire range from, say, you know, let's go to the 1-day chart. I've got that up here. Bing, bang, boom. Say we take this entire range from here to here, right? I think I've already got that Fibonacci drawn. Maybe it's, let's see. I believe it's this one. No, it's not that one. Yeah, this one right here. You can kind of see where it broke through the previous all-time high and set a new all-time high. And then where did it go? Well, let's go over here and zoom in. It literally came up to this level right here. 1.618, bounced straight off of it 1, 2, 3, 4 times, blasted through it. Where could it go from there? $3,000, somewhere around the $3,000 range. This is on a very long-term time frame. I'm talking, this is the daily chart, right? And you can go and do this analysis yourself. If you want to learn this type of stuff, I'll let you know when the gold course opens up and stuff. And obviously I'll be giving away, you know, a decent amount of free content on my channel. But these are kind of the things that I'm looking at in the market that's kind of showing me where we could be potentially going. And I can do this exact same analysis on Bitcoin, and you can be pretty friggin' lethal figuring out where the market could potentially go in the future on that next all-time high run up by looking at previous data and then using the Fibonacci tools to figure out where are those next resistance levels going to be, or where's your next price level, your key levels and targets going to be, and then using your kind of like high volume nodes to see where's our support, where I can figure out using VPVR to get into a trade to go long, right? So with all that being said, hopefully that gives you a little bit of an indication of where we could be going in our market. And the thing is if you look at gold, you see this massive trajectory that it's been on over just the past couple of years, right? Especially since COVID. All right. There's something, and I say this, like, take this with a grain of salt. You can have your own opinions, perfectly fine. This is my opinion. Okay. There is something that's brewing in the background that we have absolutely no idea is happening, right? But if you follow the money, if you follow the volume, if you follow the charts and the prices of assets, especially safe haven assets like gold, like silver, potentially even like Bitcoin, and you see the key players that are putting their money into those assets, they're kind of giving you their hand, because a lot of them are publicly traded companies, and they have to show you this in reports, quarterly, yearly, whatever it may be, earnings reports every single quarter, right? A lot of these publicly traded companies, they have to, and especially if they're regulated companies, right? They have to file these different reports, even if they're private, in order to comply with those regulations and the rules and the laws that govern them. So if you're watching where the money flow is going, you kind of understand where our economy could potentially be going and where your money might potentially need to be going in the interim. So with that being said, do with that information whatever you will. I'll do more of this type of analysis. Maybe I'll do a little bit on the streams sometimes, right? Whenever, especially when we're talking about pertinent information, like, look, Bitcoin fell here. This is why. Gold went here. This is why. I'm going to mainly talk about those two assets because I think those are the two most pertinent assets, just in my opinion, moving forward. So yeah, you can do this in a bunch of different ways, but I'll do everything that I can to help everybody out. And hopefully that information is helpful to you. And I will continue to bring more now that I can kind of get back on my channel and do my thing. So with that being said, hopefully everybody has a good hashtag Friday Pi Day with their beautiful families. It is hashtag Friday Pi Day. Everybody knows that. There's no updates on Burrow Core. And frankly, I mean, what are you going to do? You know, what are you going to do? You sit there, hurry up and wait, right? So I'm not really going to like beat that into the ground too terribly much. I'm not going to talk about it too terribly much because I don't think there's much to talk about right now, at least. So hopefully there will be more to talk about in the coming days or weeks or however the F long it takes them to sort things out. But, you know, just I think everybody is frustrated, but I think everybody also at the same time is like pulling for them. Like, hey, man, everybody hopes you pull this off, right? Everybody hopes that you get this thing sorted. And that's that. So with that being said, I'll be signing off and I will see you, whoever is showing up, in the pre-send stream here in about 33 minutes. And I will see you in my next hopeful video. Maybe I'll post some stuff next week. I don't know. Let me figure out what my content's going to be looking like. And I'll definitely see you next Friday on the Friday Pi Day Wolfer briefing, baby. Everybody have a good day. Peace.